Hi. So TCS today came out with its Q1 FY26 earnings. So you remember the IT companies generally start the proceedings in the quarterly releases, and when you look at some of the headlines, you would probably see that their profits are up by 6% and they have announced a dividend. But if you roll up the curtain and if you look at closely at how their earnings are reported in the last year on year level, it is down by almost 3% on a constant currency basis, which is the way it should be looked at given a lot of these IT companies earn in foreign currencies. But the bigger problem I feel is that the company has not been able to figure out their growth path going ahead in the last 1.5 years. On a quarter on quarter basis, their growth has remained stuck, and now in this quarter we are seeing even a degrowth. And while their margins are persistent, I think one of the reasons where probably one has to look deeper is the kind of customer mix and the product offering that the TCS continues to have, because this is something I'm sure once we look into their earnings call would have been highlighted, is the size of the client base is somehow shrinking towards the downward side. So if you look at enterprise clients with more than $100 million plus contribution or $50 million plus contribution has degrown in the last 1 year. So this is quite alarming for somebody like TCS to not be able to hold on to these large clients. Now, if this is a high level view on how the business is like, I think the market has already figured out that there is few issues. So if you look at the 5 year chart of TCS and look at the kind of underperformance it has done versus the Nifty. So while and if you start zooming in, so say for example in the year to date, we can see that while there was a brief dip during the April announcement of tariffs by Trump, and which led the markets to slightly dip, but thereafter most of the index has recovered quite much, but TCS has not. And in fact, in the last 3 months, this divergence only keeps growing more and more. In fact, in the last month, 1 month itself, what we had seen is that TCS has already probably priced in this poor earnings for this quarter that was expected. Now, why I say that is, if you look at the financials, and if we are not looking at all on the business, look at their current state. This is a business that is today, or not today, has been generating over 20-25% operating margin consistently for the last 10 years. And in terms of the returns on its capital employed, it is way 50-55%. So that is a huge number in terms of the profitability of the kind of business that TCS runs. However, the challenge is how much of this is gonna keep continuing, and where is the cliff, if at all, that the market is expecting. Now, if you look at some of the other Nifty indices itself, I think TCS is sort of a flag bearer, and eventually the same thing you might be seeing at other IT companies also. So look at the Nifty IT index. You can clearly see the last 1 year, while TCS has gone down by 15%, it's the same thing happening with Infosys. HCL being probably an outlier here among the top floor, but the same downturn with Wipro. So clearly TCS has been facing the biggest pain when it comes to some of the new AI advances that has been happening. And it's very difficult to visualize TCS recovering its high level. It's already, I think, down, it's way down its 200 day average levels. And I think it will take quite a bit of a miraculous turnaround before we reach to the similar levels. I'm very surprised still why some of the brokerages houses continue to give TCS the benefit of doubt. If you look at post March earnings calls also, you can clearly see brokerages houses like Motilal Oswal and Prabhudas Leeladhar and Geojit BNB Paribas giving them a buy rating call at the levels at that point of time. And I feel it's very difficult to defend going ahead.